So, today's video, we're going to talk to you about the best way of paying yourself as a limited company in the UK in 2020. Now, before I begin this video, I have to say that this is just my own personal advice. I'm not an accountant, and therefore you should consult your own accountant because they are much more qualified to do so. However, I personally have been running an Amazon business over the last 2 years and have had to do a lot of research into taxes. And I personally think it's very, very important for you to do your research into taxes as well, because you want to make sure that you are as tax efficient as possible when it comes to paying yourself, paying your company, paying your employees, etc., etc. So what we're going to do today is just cover the different taxes that are involved when it comes to using your own company. And also I'll give you at the end an example of what you should be paying yourself, or in what way you should be paying yourself a £50,000 income a year. So let's get straight to it. The first things first we need to do is talking to you about corporation tax. And that basically is all the net profits are basically in liability of corporation tax. Now, what do I mean by that? Basically, when you're yourself, you're an employee, you pay your tax before expenses, okay? Before you go out shopping, etc., etc. But when you're a corporation, you pay your taxes after the expenses, okay? And currently the corporation tax is 19% in the UK. Now, it was supposed to be changed to 17%. However, I think because of coronavirus and a few other factors, this corporation tax is still within 19%, which is unfortunately is a shame, but it is what it is. And as I said before, the expenses can be offset against profits and to pay less tax. For example, if you have employees and you have to pay their salaries, that comes out of your revenue and your gross profit before you start paying taxes. Your phone bill, if you have employees that are using their phones or you have a phone yourself, you can offset that to pay less tax. Storage fees, various advertising fees, fuel, accountancy fees, all of these things that are expenses to the business, they get taken away from the gross profit first, then you get the net profit, and then you pay 19% on that net profit, okay? So what you want to do is you want to make sure that you get an accountant that knows your business very well, and they will be able to provide you with advice as to what exactly you can expense. The more you can expense and the less net profit you have, the less tax you will pay. The next thing we have is income tax, and this is basically where you pay on all of your income excluding dividends, okay? So allowance at the moment in 2021 is going to be around £12,500. So what do I mean by that? Up to £12,500, you pay absolutely zero income tax, and that is something that you should definitely be aware of. However, now the tax brackets is the basic rate, which is the 20%. You go from 12.5 to 50,000. Higher rate, which is the 40%, 50 to 150, and then the maximum rate that you can possibly pay as income tax is £150,000. You will get 45% rate on that, which is obviously quite a lot. Now, you will only pay, let's say for example, you're moving from the basic rate onto higher rate, and you're making 60,000 a year. You will pay 20% all the way up to 50, and then you will only pay the 40% from 50 to 60. So that £10,000 difference, you're going to be paying 40% on that, and that is also very, very important. Now, dividends is the next way of you can potentially make money from your own company and take money from your own company, and that is you will only be able to pay yourself a dividend if your company has made profit. Personally, I haven't been able to pay myself a dividend last year or the year before because my company effectively has been at a net loss. So after all the expenses that I've taken out of the business, it actually comes out to being as a net loss. And this is only payable to company shareholders. So if you're the only shareholder, you are the only person that is eligible for those dividend payments. If you have partners, then they will be eligible as well, but not the general public. And the tax-free dividend allowance is £2,000. Now, it used to be £5,000, but I think last year it was changed to £2,000. So anything in that range, you will only be paying zero tax at all, but it's only for the first £2,000. However, now, what I mean by that is, so let's say for example you have the tax allowance of income tax is £12,000, and you have dividend allowance of £2,000. However, if you, let's say, for example, pay yourself a £6,000 salary, then you can additionally take out £6,500 in tax-free dividends. Okay, so to increase your income, basically the government is saying that we do not want to charge you for taxes anything up till £12,500. So if you take that as a salary or you take that as a dividend, you don't pay any tax, which is great. Now, the current rate for the dividends is actually much better than the income tax. And as you can see, the basic rate from 14.5 is only 7.5% to 50. And from 50 to 150 is only 32.5. And then the additional rate is going to be 38.1% of anything above £150,000. So as you can see straight away, the taxes for dividends are much, much lower than it would be for the income tax. National insurance is also something that is really, really important for you to know, because you as an employer will have to pay not only at the employee tax national insurance, but also as the employer as well. Now, the primary threshold, and this is your personal NI, this is you as an employee, you will pay every national insurance anything above £792 a month. And then on the secondary threshold, which is you as the employer, you will pay £732. Anything above that, you will pay 13.8%. Okay, and that is also very, very important. So effectively, you can right now pay yourself as a salary £732 a month and not pay any tax. No income tax, no national insurance tax, no tax at all. That is the amount of tax-free money you can take yourself out. So how should you get paid? And this is what we've come to. This year, you can earn £14,500 as tax-free. You have £12,500 as a salary, and you have £2,000 as dividend income. Okay. However, me personally, I wouldn't advise you to pay that £12,500 as a salary, because you have the NI liability. Okay, so what I would suggest you do is actually pay yourself right up until the NI threshold, the £8,784. Okay, anything above that number, you will start paying national insurance. You won't be paying income tax straight away, but you will be paying national insurance. So you want to take that money out, okay, and then the rest of the money you want to be paying dividend tax. You will want to be taking that money out as dividends. So for example, in here we have, you want to be taking out £50,000, you take out 8,724 as a salary, then you take out 5,776 as dividends, and that money is tax-free. The rest of the money that you want to take out, which equates to £35,500, you will have to be paying tax on. And the way you want to take that money out is through dividends. It's not through your salary. And that works out to be 7.5% because you're in the basic rate, and you will be paying £2,662.50 a year in terms of tax. So you take out effectively £50,000 out of your business, and you pay £2,662, which is very, very tax efficient in comparison to paying yourself as a full-fledged salary, and then you're potentially moving into another bracket, another limit. And effectively, just to give you an idea of how low of a tax rate it is only 5.33% of your £50,000 in income. Okay, that is all. You're not going to be paying 20% tax. You're not going to be paying anything above that at all. So when it comes to paying yourself as a basically shareholders dividends, you want to make sure you take out as much money out as possible as dividends. Use up the tax-free allowance, but then take the rest of the money as dividends. And if you have a shareholder or like a family partner, then you can use their tax-free allowance and their tax-free dividend allowance as well, and use their, so for example, if you know, in a household, if you want to take 100 grand, you will only effectively be paying around £5,000 in tax. And this effectively is how the rich get richer and how the poor get poorer, is because there are so many tax loopholes. And this is just one sort of small one that is completely legal. There are many, many other ones that you should potentially look into as well if you want to. So I really hope you guys found this video useful. If you did like the video, please don't forget to subscribe and like it. If you do have any comments, please don't forget to comment below. I'll speak to you soon. Bye bye.